Hang Seng is doing well with a 200-point gain right now.
Revisions in the seasonals, which rarely happens, that decline is not as dramatic as it was.
In Adani Total Gas as well as Adani Transmission, MSCI has deferred the implementation of the weight reduction to the May review.
This year is all about earnings, and when you read what other strategists are saying, they're very much focused on the recession, the earnings recession.
Windfall tax on crude production has been cut to 4,350 rupees per ton versus 5,050 rupees per ton.
Around 18,100 is where we have opened up at.
The way the valuations have turned in the last 12-18 months, you have seen a significant rally in manufacturing businesses and manufacturing and engineering businesses.
The easiest part of disinflation is over, then does that mean the central bank have to do a lot more potentially to be able to correct the demand function and bring the economy back into equilibrium?
The Nifty is above 18,100, 18,120.
Shobha Gangwal was the likely seller in today's block deal. A 4% stake is what we were anticipating is what she would be pairing from her existing 7% stake.
Most on the street were expecting a double-digit mid-teen sort of growth.
80 points higher on the Nifty is what we are seeing right now.
Well, that was a day so far. A quick wrap of what has happened till this point. You're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me here in the studio is Reema. Nigel makes an appearance in the studio as well. Nigel, hi. Good to have you here.
Hi.
And Surabhi is going to be joining us from the newsroom floor, but that's in from the newsroom floor, and that's in just a bit from now. Guys, I mean, I have to say, as we start the session, there is a bit of a cut which has emerged, right? I mean, we were looking at 50-60 points on the Nifty, but it's disappeared. And the intraday Nifty will basically tell you that, if we can have that up. Starting 218, 219 basically, we were at 18,088. We've seen a 40-45 point slip. That's in the last 10 minutes or so. So, that has happened just now. In the last 7 to 10 minutes of trade, actually. Let's see. But indications were there that, the market had been doing okay, but it was finding it difficult to hold on to gates. I'm talking about the Nifty, really. It hit the 18,120 mark. That's a sort of a bit of a resistance, which we highlighted in the morning. There's a retracement, a moving average, etc., which coincides there. We actually crossed that. The high, I think, is 18,134, but there was a cool-off, and there is more cool-off, which is materialized as we begin this edition of Closing Bell. The broader market, by the way, is doing better, but that also, with the last 10-minute sell-off, has come off a little bit. The gap between advances and declines is reduced, so that's happening live. We'll talk about that more, but it's still in favor of advances. Gains in pockets like IT, there you go, that's what I'm talking about. The gap is reduced and almost heading towards conversions. Gains in sectors like IT, real estate is doing well, and I think metals as a pack is doing quite well in trade right now. There are lots of these individual big movers like Tech Mahindra on your screen, which we will discuss here over the next 60 minutes. But, some cool-off which is coming through as we begin the last 60 minutes of trade here. Guys, hi.
Hi. There's some cool-off even in the banking names. So the Nifty Bank was up 250 points at one point, but now it has dipped into the red. So the Nifty Bank has also given up all its gains. And this has been a trend across Asia as well. So Hang Seng ends with a gain of 1%. But again, from the day's high, the Hang Seng index has slipped 1.5%. At one point of time, the Hang Seng index was up nearly 2.5%. And even the Chinese markets are going to go down with a cut of 1%. So China ends in the red, and Hang Seng has slipped 1.5% from the day's high. So Indian markets too have seen that rally, fizzle out. But mid-caps are doing well, and considering that they've underperformed in the run-up to the last couple of days, there is that bit of a catch-up. So they are off from the day's high, but still pretty okay.
Well, that's right. Reema, I'm riding my luck actually, because yesterday the call was that the Nifty had some unfinished business at higher levels, and we ended virtually at the high point of the day. This morning the call was that, in fact, if the Nifty is going to open up with a gap of around 70-80 points odd, you would be better better off just booking some profits and taking some money off the table. After all, you've had a bit of a good run, close to around 300 points out from the recent low. So taking some money off the table would not hurt anyone. And it appears it has played out, at least as of now. But the last 50 minutes are going to be very, very important because we have a weekly expiry that plays out. So let's pull up two strikes. One is the 18,000 call. Well, it's been quite active today. 18,100 call actually in today's session. Well, the average premium out there will be roughly around 25 to around 30 rupees. At one point in time, it was more than 40 rupees as well. So given that the premiums around 30 rupees odd, those call writers, they're looking at trying to defend the 18,130 odd level. On the downside, well, the 18,050 put, that's fairly active in today's trading session. And the average premium out there would be around 20 rupees. So you deduct 20 rupees from around 18,050. That's giving you the broad expiry range. On the downside, 18,030 needs to hold out. If we trade below that level, we could quickly slide far more. So just keep that in mind. On the upside, it's almost a given that we won't cross that 18,130. If for some reason we can get past that level, then we'll see a massive bounce. But that's the positioning, at least as we speak. But Surbhi's in the newsroom as well. Surbhi, a bit of a switcheroo today. You're in the newsroom. What are you tracking?
I'm in the newsroom and I'm tracking that same market as you, Nigel, I can tell you that. But it's just good to see some action, right? Because we got so used to this absolutely flat, range-bound trade for the last couple of days. I think yesterday and today have been a nice departure. More action, and I'm completely with you. I think even I'm waiting to see that expiry move and what direction this market takes. I don't know if the shorts will try and cover, if anything has changed in terms of just the whole outlook with respect to the FI shorting. You were mentioning that in the morning as well. But it promises to be a very, very exciting last half an hour. And the good news that I've noticed today in the market is the breadth is really wide. I mean, that advance decline ratio has been rock steady. We've never had a problem of the mid-cap market coming under pressure, stocks being sold off. Even right now, I mean, you've got, over 1,700 stocks advancing, just about 1,000, 1,050 on the declining side. Yes, the lines are narrowing, but it's still been looking good. I'm not sure whether you guys discuss this or not, but some of the high flyers today, I mean, take a look at SpiceJet, 12% on that ATF duty cut that happened. The follow-up buying on PI Industries, 7-8% over there. Tanla platform and the fact they're launching this anti-phishing application in Barcelona later this month. I mean, the reaction to these stocks tells you that people are out there, they're looking for trades, they're looking for bets, and the market just seems far more active on the whole. And for me, that's just a great development after a couple of dull days. Back to you guys.
Okay, interesting there. Bharat Dynamics is another one of those big movers, up 9%. But let's tell our viewers what we've lined up on closing bell today. Tech Mahindra is surging in trade. What's aiding the up move? Details coming up. Nestle is also higher in trade on the back of a strong Q4 numbers. We'll get you the complete earnings fine print. A sharp cut in windfall taxes on exports of aviation turbine fuel and diesel are positive for names like Reliance Industries and ONGC. Details on the show. We'll discuss stock-specific and market action with Ravi Dharamshi of Value Quest Investment Advisors. All this and much more in the next 60 minutes.
Okay, well, how should you position yourself in the last hour of trade? That's the question, isn't it? What should you be doing incrementally? Mitesh is with us to help you with that. Mitesh, good afternoon. Good to have you back on the program. So a little sort of confusing kind of price action on the Nifty at least, right? Not holding on, slipping, but getting bought, not going one way either after slipping. What's your sense? What's the best way out on the Nifty and then your trades?
Prashant, I think it slipped up, but I think the good thing is that we had a gap up which is being held on. The other thing is that we also nearly met the 18,150 pivot. So I think we just come off a bit. If you look at the last 4 days of action, despite the fact that the market was contracting, the low on 13th of Feb was 17,700 and today the high is 18,130. So you had a 4-point kind of a short-term bump up. I think some profit taking is happening, but I think as long as we remain above levels of 1,700, 970, 960 zones, I think another 30-40 points lower, I would be wanting to buy or add on to long positions on the index. So I think I'm keeping a stop below 79.50. So I think that's the idea. The setup still remains positive. The overall indicator direction is also on the upside. So maintaining a positive bias. On the stock side, ONGC I think has broken out, given a fresh, has made a fresh high. Also, the price and volume action is very convincing today. So that's a buy with a stop at 152 for targets of 166. And Oracle Finance, that's another one which is on the buy list. That's a buy with a stop at about levels below 3190 for targets of around 3325.
Okay, those were some technical trading ideas. The stock of the day today is Tech Mahindra. In fact, it was the big mover yesterday as well. In a span of 2 days, Tech Mahindra has gained 11%. Well, we don't know what's fueling this kind of rally in the stock, but we are here to tell you a few triggers. One is an impending management change. The current CEO and MD, CP Gurnani, and he's been at the helm of the company for a very long time now, he officially steps down in December 2023. And now for the last couple of months, the street has been speculating who will take his place. Again, yesterday, there were rumors that on the analyst day, which is scheduled on 3rd of March, maybe the company will announce the new CEO. We know, looking at other cases in IT companies, that a CEO can energize the business. You remember when Salil Parekh took over Infosys, it was in the aftermath of a lot of issues, and he really turned around the script for Infosys, and the stock has been an outperformer. So then the street is going to be watching this impending CEO change very, very closely. Two, its valuations are relatively inexpensive versus peers. The stock trades at 15-16 times forward multiple. In comparison, TCS trades at 24 times and Infosys trades at 20-21 times. So valuations are relatively cheaper. Three, we are in the 5G era and communication contributes about 40% to the overall revenues, and the communication verticals can be a key growth driver on the back of the 5G rollout, because a lot of enterprises will now be developing 5G use cases and Tech Mahindra can aid in that. The risk just in the near term is that the management post their Q3 numbers sounded very cautious. They indicated that there is some weakness in large clients. They are reprioritizing their IT spending. There is the extension of furloughs will extend to January in a few clients, and the slower decision making in discretionary spending. So Q3 numbers were not a big beat, but the management sounded a bit cautious, and that's the risk we need to take on board. But right now, the street is squarely focused on who the next CEO is going to be. In fact, earlier at Davos, we had caught up with CP Gurnani, the CEO and MD of Tech Mahindra, and he was in conversation with Shireen Bhan. And at that time, he had said that don't expect an immediate announcement on the succession plan.
The communication to the stock exchange has been very clear that I am on the saddle till December 23, and the successor would be a CEO designate. There is no immediate announcement, so we will have to wait for a little while.
All right. Well, Gurmeet Chadha, Managing Partner and Chief Investment Officer at Complete Circle, joins us. Hi, Gurmeet. Good afternoon. Well, what's your take on the stock? Valuation-wise, as Rima said, has some comfort, waiting for the new boss to come ahead and, in fact, take over. Your view on the stock? It's had a good run in the last two sessions.
Nigel, difficult to comment on two-day move. Could be something tactical and some news. I've been hearing news. I mean, no confirmation. Is somebody senior from Chris Capital? That's what the market rumor is. But you can't really take a call basis these rumors, and the moves can be sharp both ways if it doesn't turn out to be true. But the Q3 print was relatively weaker. So if you see the top 6 large IT firms, they on a consolidated basis they did 2.3%. And the drag was basically Tech Mahindra and Wipro. So, and that's the reason the margins are also around 12%, although there was a sequential improvement. And if you see the bulk of the growth, so they did about 13,700, 800 crores odd revenue. The bulk of the growth actually came from the BPO segment, which again, is not as high margin as some of the other verticals. So I think what I've learned over a period of time is that if things are cheap, they are cheap for a reason. So while I agree the valuations are not demanding, but any good leadership change, could be positive, in the medium term. But difficult to, speculate. There are, as I said, better opportunities in terms of which are more fundamental in nature. Infosys for 3 quarters have been upping the guidance. We saw KPIT Tech making a new high with full quarter with Technica, integration doing very well. We saw very good numbers from Persistent as well. We recently saw TCS hitting the $7 billion mark. So I think that this is a year is going to be of differentiation in IT and companies which are getting more digital and cost optimization deals, which are real partners in true sense, will get differentiated from more normal IT services.
Okay, all right. By the way, this, just watch the ticker. Sanghi movers. Remember, the stock has been a big mover. I think there was a promoter dispute which has now been resolved amicably. That's the exchange notice that just come out from there. It was an inter-promoter dispute that's been going for the last few years. And they're saying that it's been resolved. So that's why from the lows of the day, you've seen a bit of a bounce on that stock. I think this is a long pending dispute that was going on. If you take a look at the stock, it's just been a big mover. It's a play on the infra theme. They give those cranes out, on lease. So that's one stock. It's up 75% correct in the last 12 months or so, guys.
Gurmeet, anything on names like HA, these defense names? I don't know if I've missed something in terms of a news flow, but Rima mentioned Bharat Dynamics. HAL is up some 8%. That's, it's correcting a lot of the recent, very recent underperformance with these moves. Are you picking up anything?
So, HL, the news was with the Argentinian air defense, some MOU getting signed on few products. And I think if you see last 2-3 years, it's been a good performance. Prashant, I think especially for HL, it remains in our coverage. 2/3 of the revenue comes from service and overall, right? Which is actually the 30% plus margin business. And that's the reason for last few quarters, they are at about 25% kind of EBITDA margin. Remains the solid defense play. Despite the run-up we have seen from 3 digits now to well at 25,2600, the valuations are still more reasonable. So remains there. And I think they have great order book execution ability. So in terms of near-term visibility, in terms of medium-term visibility, execution is very important. So I think HL looks good. We have solar industries we have discussed multiple times in the portfolio. Saw a bit of a correction, but today even that is up. That's a nice play between, explosive, industrial explosive and defense. Defense, the order book is shaping up well. They will start contributing 10-15% from next year on defense. And it's more into more fast-moving consumable defense, which is hand grenades, Pinaka rockets, etc. So these are the two stocks which are there. Solar being a portfolio stock and HL being in our coverage.
Gurmeet, that was an interesting one. Fast-moving defense items, like hand grenades. Okay, I totally get why they're categorized as that, but just hope they're not needed too often. But thanks for that quick take. Stay on. We have more questions for you. Sonal is joining in, and you're seeing these moves on ONGC or that move on SpiceJet. All of it has to do with the changes in windfall tax that were announced late last evening. So let's go across to Sonal for all the details first. Sonal?
Thank you so much for that. Well, yes, it's a cut that has come in this time around as far as windfall taxes are concerned, and that's why the excitement in some of these oil producers as well after the reported decent set of third quarter earnings. For crude oil production, it has been cut to 4,350 rupees per ton versus 5,050 rupees per ton. The bigger cut has really come in for ATF fuel. So on export of that, duties will be lowered to 1.5 rupees per litre versus 6 rupees per litre. For diesel as well, there has been a massive cut, and this is where refiners were seeing lower cracks, and taxes was adding some pain to that as well. So there it has been cut to 2.5 rupees per litre versus 7.5 rupees per litre. For petrol, it continues to be nil as well. So it has come in as a relief for the oil producers and the airline companies as well because of the lower taxes. So of course, all these stocks in focus today.
Okay, thanks Sonal so much for that. Gurmeet, just want to get your take on some of these names. Let me actually start with ONGC. I was looking at one of the brokerage calls as well. I think it was CLSA, if I remember correctly. And, they're quite optimistic. They say it's obviously the best-in-class dividend play across Asia, by the way, ONGC. And they're expecting better production levels next year onwards. But would you be looking at this stock, or do you think this is one of those quick flash-in-the-pan moves because today the stock is reacting to this windfall tax cut?
You could be tactical here. So if you see at 40-41 rupees EPS, this is at less than 4 times, earnings. So valuations are along with dividend yield, very, very undemanding, very, very reasonable. And if you see the 9-month EBITDA, I'm just go away from the Q3 numbers, they're almost at 58,000 crores, which is better than high base of FY22, and this is adjusted for the windfall tax. So if you build in, let's say, $75 adjusted for windfall tax for oil, let's say, or 70-75, and you build maybe 20-21 bucks on the gas, which is per SCM, and assuming that KG thing comes in FY25, which despite all the price caps, you are probably looking at 50 rupee plus kind of a EPS. So I think it's a good medium-term, short-term, reasonable valuation. But if you want to play that, oil and gas and the dividend yield, and in a market like this, anything low value, can make sense. But more from a longer-term perspective, I would be more interested in a Reliance with multiple triggers. 50% EBIT now being Jio and retail. There will be value unlocking with Jio listing at some point of time, and even monetization of energy assets at some point of time. So that's, to me, is a more structural play. Has consolidated, since the deals they announced in Jio and retail. So that looks more structural. This could be a little more tactical or more short to medium term.
Gurmeet, do stay on. Need to get into a break. On the other side, we'll also be joined by Ravi Dharmshi of Value Quest Investment Advisors.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC.
LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
टेंशन किस बात की? सेंचुरी MDF का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ.
Low emission premium plus by Century ProWood.
Indo Wind Energy Limited. Rights issue open. Closes on 24th February 2023.
अरे भेज दिया डैड ने यार. कहते जाओ पासबुक अपडेट करा के लाओ.
मिस्टर चिंटू, हेलो, प्लीज अब अपडेट.
हाँ. वैसे ये सब तो आपके ऐप पे भी दिख जाता है ना?
हाँ.
पापा को बताऊंगा.
वो फिर भी यहाँ आएंगे.
क्यों?
पासबुक तो घर पे दिख जाएगा, किंतु उनका जोक्स पे हंसने वाला यहीं मिलेगा.
रिश्ता आपसे है, सिर्फ ऐप से नहीं. फेडरल बैंक, योर परफेक्ट बैंकिंग पार्टनर.
लड़की होने का मतलब ये नहीं कि बंदिशों से दोस्ती कर लो. कामयाबी हौसला देखती है, जेंडर नहीं. इसलिए लाइफ तुम्हारी, रूल्स भी तुम्हारे.
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है. इंडिपेंडेंट फ्लोर्स फॉर द इंडिपेंडेंट यू.
Bertram, meet Hector, the car that pampers me.
Pampers you, sir? Only a car.
Hello, MG. Good morning.
Good morning. What a beautiful day.
This is my favorite. Traffic jam assist. Ta-da!
Sir, please.
Relax. Hector's got this. Told you, it pampers me. The next gen MG Hector. It's a human thing.
For how long will you continue being tensed about the future? With LIC's new Pension Plus, make your own pension plan because this plan creates market-linked wealth for your future. Moreover, this plan comes with guaranteed additions and also offers various options for receiving pension so that you grow young and tension-free. LIC, हर पल आपके साथ.
Welcome back. Midcap IT is having a very strong session. So outside of the frontliners, you've got Nucleus Software, that's up 17%, where the management told us that with the cash that they have on the books of nearly 500 crore rupees, they could consider a buyback. Mastech has gained 7.5%. Emphasis is up nearly about 5%. KPIT Tech, Persistent have gone ahead and hit fresh 52-week high. Strength seen on LTI, Mindtree, L&T Technology across the board. you are seeing some big moves in the mid-cap IT names, and that's clearly the leadership sector today. But let's talk about Nestle, because they've reported a strong set of Q4 numbers. Margins were a big beat. Mangalam is here with the fine print. Mangalam.
Well, Nestle's fourth quarter calendar year FY22 calendar 22 numbers were rather better than estimates. In fact, it was an operational beat, and the revenue was mildly below expectations, led by mid-single-digit volume growth as against street expectations of 7 to 8% and that was perhaps on account of the price hikes that the company would have taken to mitigate the inflationary impact or the pressures that they had, and as a result of which the operational performance did much better. So if you compare it with what the street was anticipating, the revenues that they've posted is close to around 4250 odd crores. The street was working with a number of 4350 odd crores. So there was a 100 crore miss out there, but they more than made up for it with their operational performance. A 977 crore EBITDA versus expectations of 937 crores. That meant that the margins have actually expanded at around 23% versus expectations of 21.4%. And the bottom line was a mild bit, 628 crores versus 618 crores. And mind you, this was despite a 200 basis points decline in gross margins from 56.9% to around 54.9%. How is it that the company did that? Well, one, they took price hikes. Secondly, other expenses as a percentage of sales came down to 22% as well, from around 23.5%. Domestic business grew by about 14%. Exports, which is a smaller part of their business, grew by about 17%. For Nestle, the big trigger going forward will be, scaling up of the pet care business, Purina, that they've engulfed in their own vertical right now a couple of quarters ago. And the other one will be scaling up of their baby food business, which is Gerber. But importantly, for Nestle, it is also relatively less impacted by the slowdown that we're seeing in rural India, because majority of their earnings come in from urban, and for rural itself, they are expanding their distribution. So even if the same store does not buy too much, they are entering more stores. So as a result of which, the rural business grows for them too.
Thank you very much for that, Mangalam. Gurmeet, thoughts on Nestle India? Not particularly cheap, but the company is delivering on margins.
Steady numbers, but you won't want to pay 85 trailing P and 70 times forward for this growth profile in a market where interest rates are going up. And my view is that with government spending on capex and you have to be on the camp whether you're on the capex cycle. And I think we are in a capex cycle. May not be as aggressive in 2003-07, but reasonable momentum there. I think eventually you will see labor coming for the infra work and some of money getting back into the rural economy. Also with the winter crop and government initiatives and a lot of state elections this year. So I'm betting more on rural recovery playing out this year, probably in the second half of 23, and for that probably you're better off with something like a Dabur, which being a little subdued, more than 55% revenue comes from rural economy. Also look at something like ITC. ITC obviously still is 80% cigarette, but if you see the quarterly update, their FMCG business continues to do well, improve margin, have more margin of safety despite the run up, and one stock which has been there for us for a while has been Tata Consumer. So happy playing it through there purely because of valuations right now. And I'm of the camp that you should buy when things are not looking good. And right now I think the rural consumption is what concern is. My sense is some of it should get addressed.
All right, Gurmeet, we'll leave it there. Thank you very much for your time. Appreciate you joining in with that perspective. Thanks indeed. 45 points on the Nifty is what we have at 18,062. We have now Ravi Dharamshi joining in, Chief Investment Officer at Value Quest Investment Advisors. Ravi, good afternoon. Great to have you with us here. Thanks very much for your time. I just want to start by asking you your view on the markets, Ravi, because many are taking a bit of a skeptical view on things. Earnings have not been all that great. There have been more downgrades than upgrades. And even when you talk to companies and ask them how, Q4 so far has panned out, in many cases, it's not a very comforting kind of picture. So let's just get your sense on how you are seeing the underlying environment with regards to stocks and what the near-term view is.
Everything has been thrown at this market, from interest rate hike spread almost to the extent of 3-4%. We have been through inflation, we've been through war, we've been through crude spike, and despite all that, we are within 3% of a new high on the indices. And even if, for that matter, the overall market also probably be down max 10%. Barring some of the tech stocks which are down 50-60%, some of the new IPOs, new age businesses. I think we have done well to survive this turbulent period without much capital. So from that point of view, market is telling us that India is standing its own. No doubt about it in the world. So the period of wealth creation will probably begin again once all these things are behind. In my opinion, I think the worst of inflation is behind us. That doesn't mean that interest rates have to come down, but even a incremental positive. Even from India's point of view, I think the recent print on the inflation is not going to change the stance too much. In fact, RBI maintained that they are going to maintain their stance, which was biased towards tightening. So, having said all this, with that kind of a backdrop, I will take markets where they are any day. Will they start performing from here? I think that depends on some emergence of some positive factors. As you rightly mentioned, the quarterly results, there was some concern. I think most of the concerns are surrounding around the margins. I think the margins for most companies are taking a hit because of the raw material prices increase, because of interest cost increase. The overall, there is a slight dampener. But having said that, I think the lead indicators are suggesting that the margin pressures are actually easing. So I would wait for a positive trigger, but
I think we'll just, we'll fix your audio and then we'll just come back to you. I think we're having a bit of a technical glitch as we speak, but we're almost down to around that 3 p.m. move on, and the Nifty has come off close to around 80 points from the high point of the day, though there are select stocks that are moving around, and they're moving around quite a bit. Case in point being some of these defense stocks have built onto those gains, so they moved to the high point of the day. A couple of metal names as well. They were a little bit lukewarm earlier today, but JSPL has moved higher. So pull up the intraday chart out there. That stock has spiked up a little bit. Granules has moved to the high point of the day as well. And Divi's Laboratory, whose numbers were quite disappointing, or very disappointing, so to call it, and the visibility as well is not that great. Divi's Laboratory as well has seen a bit of an uptick. So plenty of stocks moving around, though the headline index is sitting pat with a gain of close to around 50 points odd. On the flip side, a couple of stocks as well that were losing out. HDFC, that's putting pressure on the index. The Nifty is unable to move up is because HDFC has now moved into the red as we speak. Intraday chart comes up for you. Ravi, you're making a point. Go ahead. We can hear you now.
No, I was saying that market has gone through a lot and we are still where we are. I think market is waiting a positive trigger and we should start performing. There is some sort of a fatigue that has set in because of the non-performance of the market for almost 15-16 month period. So people have forgotten that India is actually doing quite well in the OSS. It's an OSS in the world. The world has actually fallen off the cliff. So, I remain quite optimistic. Things should start shaping up well from here.
Ravi, hi, good afternoon. I just want to get your thoughts in on industrials and capital goods, since that is a space that you're quite optimistic on. I think you're overweight here. So how are you playing it? I mean, what part of the capex cycle are we in right now? What would be the best bet? I mean, do you go for a diversified conglomerate like L&T? Should you be looking at very specific companies like, I don't know, maybe a Thermax or a Cummins? How should one be approaching this part?
Yeah, good afternoon, Surbi. Without naming any company, so let me just say, sir, we are still at the cusp of the capex cycle. Most of the burden is being carried by the central government. Even in this budget, I think we have witnessed a 30% plus kind of a jump in the capex budget. So that tells you that the investment cycle, and we have, in absolute terms also, we have gone from about 3 lakh crore kind of an investment to a 10 lakh crore. So that is a huge jump, and that will have a multiplier effect in the economy. So I am very bullish on the capex theme, and I think private capex is also beginning to pick up, and soon enough state capex. So the theme has a long way to run. Unfortunately, most of the companies that you mentioned, from a near-term earnings perspective, will look like they are very overvalued. But I would say one has to look beyond the cycle. You have to look at, are these at the peak capacity utilization? Are they at peak margins? And are those peak profits getting multiples or not? At this juncture, I feel the multiples might look high, but the profits are not high. So at some point of time, through time correction or maybe price correction also, whenever an entry point is presented, these very stocks in this capex theme will do very well. Overall, I think within capex, we are most bullish on manufacturing sector, so to say. So manufacturing and energy transition are two big themes that are going to pan out. And within manufacturing, I would say defense and railways are two where government's focus is extreme. We still don't know how to, make the companies, because there are not too many listed companies where you can create that kind of wealth in these sectors. But definitely this is a sector where we are witnessing tremendous amount of money going in, investment going in, and a lot of wealth will be created over here.
Ravi, on the day of the budget, everyone was very excited to hear in the new tax regime, the tax rates have been cut and that will boost consumption. But since then, not too many people have come out and called it out as a big trigger. Do you see consumption really seeing a leg up in the, currently, or do you see it happening in the next couple of months? Your thoughts on consumption in India?
So I agree that the tax cut per se is not the reason why one should be bullish on consumption theme in India. Having said that, I think no doubt about it, India is the last standing consumer in the world. I feel the developed market consumer, developed economies consumer has tapped out. Chinese consumer is the way up, but at the same time, there is, most of the companies over there are facing an issue with regulatory challenges. So I would say India is the last standing consumer, and the theme has a long way to go. From near-term perspective, I think there are some challenges, whether it's in the rural market or in the urban market, because the inflation is starting to hurt. So that will lead to some kind of multiple compression, provide a good enough entry point. Now, in consumption, we usually tend to equate it with FMCG, but we are bullish on more retail stocks, whether it is QSR or apparel and footwear.
Okay, all right. Hi, Ravi. Good afternoon. Ravi, one sector that's been underperforming has been pharma. And you have a couple of big disappointments in the past earnings, whether it's Divi's, Loris, Piramal Pharma, some of them were howlers. But a couple of those quasi-pharma players, like say an Ami Organics, I think you'll have that as part of the portfolio. That one has been looking at, it has prospects as well going ahead. What's your view on pharma or some of these pharma quasi-plays that you could indirectly play the theme?
So you're absolutely right. Pharma has had double whammy. And one, the raw material went up because of China, and then the finished products prices went down, have been going down in US, thanks to the shifting of pricing power in the hands of a few buyers rather than the suppliers from India. So, and it has been derating since now almost 5 years now. Barring the COVID spike, pharma has actually been on a downward spiral. So I think that now even the extra numbers that had come up last year because of COVID are also out of the system. So I think maybe it will last a quarter. But now I think the valuations are becoming really, really reasonable in pharma. It should be treated as a manufacturing company and not like an R&D company. And I think if you look at it that way, and then I think sooner or later the stories will start, the valuations will start making sense, and investment opportunities will emerge over here. Regarding the investment that we have made, our call is not so much on the pharma space. It is more that eventually a lot of the chemical production also needs to move to India. I think, in fact, chemical was the first space where the China Plus One strategy got implemented before everyone knew about China Plus One, thanks to the pollution problems. So we constantly keep looking for good entrepreneurs, good businesses which can scale up. I think the company that you mentioned is one such company, but again, disclaimer that we are looking with a 3 to 5 year lens. It might not perform for the near term at all.
All right, no, but that's good to get a few ideas. The audio is coming and going. I had a few other questions, but I guess we'll keep it for another time. Thank you very much, Ravi, for joining us here on CNBC TV18. It's always a pleasure speaking with you. Thanks indeed. Okay, well, let's move on. The market is, up 40 points, which means that no incremental big moves or anything of that sort. Now, the government has responded to the Supreme Court suggestion for an expert panel, has filed an affidavit only for judges. Ashmit is here with details. This is, of course, with regards to the Adani Hindenburg case. Ashmit, over to you.
Well, previously, when the Supreme Court took up the matter for hearing, that is the time when the Supreme Court had expressed concerns about lakhs of crores of investor wealth that was wiped out, and subsequently went on to suggest an expert committee that will lead, that will review, as well as suggest improvements to the current framework for investor protection. Now, it is in response to that we understand the government has filed its response before the top court. But interestingly and importantly, this has been done in a sealed cover. So only the top officials at the Finance Ministry, the Solicitor General, and now the judges will be privy to contents of that letter, of that submission that has been put forth before the Apex Court. The question being asked by many is why in a sealed envelope? Well, in just the last hearing, the Solicitor General, appearing on behalf of the government, had expressed concerns that no potentially adverse signals should be sent to the global markets on account of this expert committee reviewing the current framework for investor protection. So that was a concern that was cited by the government. So on the back of that, what can we expect as a part of the sealed cover? Well, number one, the government is expected to argue to say that it is in fact open to the idea of an expert committee. However, with riders, what are these riders? That's number two. Number two is that the government is likely to argue and likely to submit as a part of this affidavit that the scope should be limited, should be very limited. The remit of this expert committee should be limited so as to not spook the global markets and the global investors. And the third is, it is likely to have suggested names of experts that can be considered as a part of this expert committee. That will essentially be the 3-point formula that will be put forth as a part of this government submission. But whether or not this will be made public, whether or not the government suggestions will be acted upon, and what the future course of action could look like, tomorrow holds the key. February 17th is when the Apex Court takes up this case for further hearing. And what's also interesting is that there's also a fresh application that is seeking a probe, not just into Adani on the corporate governance issues, but also into LIC and SBI on the back of their subscription to the FPO at significantly higher than market level. So these are issues that will be taken up for hearing tomorrow when the Apex Court takes up these petitions in the Adani Hindenburg case. Back to you.
Thank you very much for that. Need to get into a break. On the other side, we'll tell you what dealing rooms are saying in our segment D Street Chatter. We'll also tell you what you can buy today or sell today for a reverse call tomorrow.
Welcome back. You're with us on Closing Bell, and we're coming to you from the Motilal Oswal CNBC-TV18 newsroom. Well, the market, by the way, is cooling off very, very quickly. We are actually at the day's low, and I think this is that expiry impact, which is playing a little bit of a spoil sport. Pretty much coming down to the session lows, Bank Nifty is in the red. So we'll pull up some of those stocks for you. And as we do that, let's also welcome in Nimesh with the usual D Street Chatter. Nimesh, interesting day, right? Because we had such a strong start to the day, and it looked like it would be a very promising session. But this weekly expiry, I think this kind of has skewed the pitch a little bit. What are you picking up today?
It does. You know, that weekly expiry does impact the bankings largely, so to speak. So that's playing out. But broadly, it's been a week of consolidation with a positive bias. And today, for a change, I believe there is a lot of short-covering as well. And that's why, if you look at the gainers today, it's all over the place. You know, it's across the board. A lot of stocks are doing good, largely on short covering rather than genuine buying interest, so to speak. The good part is, whole of this week, we saw leadership coming in the large cap names. You know, a couple of days, Reliance has helped. ITC helped few days, and today we have a clear leadership in the technology stocks. So there is leadership now in some of the large cap stocks, which is helping the bulls to retain about that 18,000 levels on the Nifty. So that's clearly there. Even in terms of flows, again, it's a mixed day, but for the last few days, the trend seems to be on the positive side. The good part is there is no big selling coming in from the larger FIs, so to speak, in the cash market. So that's helping as well at the margin. Technically, the next level to watch would be 18,200, 18,300 on the Nifty. So that's the next important resistance levels to watch out for. I guess the FTSE rebalance, the FTSE semi-annual review will get announced tomorrow morning. So that will have a big impact on some select stocks. But I guess from that, the biggest stock to watch would be the Kotak Mahindra Bank impact as to how they treat Kotak Mahindra Bank. So that's something to watch tomorrow. But I guess today it's a day of consolidation with a positive bias, and the fact is the FIs have done net buyers at the margin for the last few days, and that's been the trend today as well.
That's pretty decent, and the buying has been to the tune of 1,400, 1,500, 1,600 crores. So it's not bad considering the huge wave of selling that we had. Okay, let's get to stocks. You alerted us, of course, on chatter earlier about Interglobe. That block happened today. What's on your list today?
So that block happened, but the important point for Interglobe is that now there is a 5-month lockup. So there's going to be no further supply as far as Indigo is concerned. Now coming to today's list, the first stock on my list today is CARE. Not been much talked about, but quietly that stock is buzzing in trade on good volumes. I believe some of the smart HNIs have done very active buyers, and coincidentally the stock hit a 52-week high as well in intraday today. So that's CARE, the first stock for me. The second stock is APL Apollo Tubes. Again, a mid-cap stock. Not a very small company. It's commanding a market cap of 30,000 crores. Very strong move in today's trade, up 6% on very good volumes as well. So and there is an FI interest as well in that stock in today's trade. And I believe this is one stock which is likely to be added to the FTSE small cap index as well. So I guess even that's helping the stock to buzz today. That is APL Apollo Tubes. The third stock is Precol. This is very interesting. That stock has been consolidating in a very narrow range of late, but now I believe there's going to be a big corporate action very soon in Precol. So that's something I'll be tracking very closely. And the last stock is PB Fintech. There are a lot of blocks which have been talked about and rumored about, but I believe PB Fintech is a stock to watch because there are very strong indications that a large block is going to come in PB Fintech very soon.
We'll be watching that carefully. Nimesh, thank you very much for that. Mitesh Thakkar is back with us for a few BTST calls. Mitesh, before that, 18,032. It's not breached the level that you were watching. I think 17,950, 960 was the level that you were watching out for. Above that, you continue to remain bullish. But are you disappointed by the price action and the sell-off that we've seen from the highs? And then your BTST calls.
So on the index, disappointed, not really much, but I think, 18,150 was the first target I was looking at. We got a high of around 18,135. So nearly met the first target, but I think the structure still is positive. So I'm not really worried about it. I would be worried in case we start breaking below these levels of 17,970 thereabout. So I think, tomorrow would be a good test for that. So maintaining a long bias per se. And on the stock side, I have a buy on SRF or BTST on SRF with a stop below 2305 for targets of around 2360, 2365 for tomorrow. I think that's closing very, very positively. And the other one which I like is DLF, that's a BTST as well. Keep the stop below levels of 368 half year and a target of 375 half, 376 for tomorrow can be looked at.
Okay, all right. Thanks for that, Mitesh. Well, always tricky, right, on expiry day. Today, we were bracing for a big gap up. We're going to end closer to the low point of the day. The problem was global cues were positive, but the dollar was stronger. You had Brent crude prices that were elevated. And the US 10-year yield as well had crossed 3.8%. Put that together, that's what caused some bit of skittishness in our own markets. But Amrish Balika joins us on the show. Hi, Amrish. Let's not talk about the index. Let's talk about individual stocks. And I believe a banking stock is what you like. Federal Bank, give us the rationale.
Yeah, Nigel. My pick is Federal Bank, though it's a south-based bank, but it has a good branch network across India and especially Northeast. And they have more than 1,300 branches, nearly 1,900 ATMs with more than 50% of the footprint in semi-urban areas. And Q3, they reported the highest quarterly earnings. The net profit was up nearly 54% at 804 crores, backed by strong loan growth of 20% plus. Margin expansion was there. Additionally, the credit cost somehow came down by about 38 bips, which is a surprise. Deposits were also up about nearly 15% YoY. NIIs was up about 27%. NIMS was at a high of 3.5%. And if you look at the asset quality, it's stable with gross NPAs at about 2.4%. Slippages were below 1% during this quarter. And if you look at the loan book, it's about 54% is retail, 46% is corporate. Been able to leverage their fintech partnerships quite well. Look at the gold loan book, which has been growing at about 20% under their subsidiary FedFina, and that stands at about 19,500 crores. So the growth has been better than what the management has been guiding, and that really gives me the confidence. And the stock has strangely corrected in the past few weeks. So good levels to buy with a target price of about 180, which is 1.5 times adjusted book value for FY25.
That's an interesting pick. I mean, it's a name which many have sort of, put bets on for the last couple of years. You could say, depending on when you got in, it's worked out, it's not worked out, but I think there's no doubt that quarterly numbers, etc., have turned around very, very smartly, and it's a matter of time, I guess. So Federal Bank is Amrish's pick. Amrish, what else are you sort of looking at? We had Ravi Dharamshi earlier with us, and one of the areas which he likes is QSR. We couldn't discuss it with him. There's a bit of an audio issue. Is QSR companies, right? The third quarter, which supposedly is a good one, has not been a great one for them. And early indications are that January has not gone all that great either. Any thoughts, and what do you like in that space?
No, in that space, in fact, I would be a bit careful because, one of the major ones is Jubilant, and I think they have lost their mojo. Because clearly, they had that first mover advantage, which they utilized very well, and that got reflected in the valuations. But now with the sort of competition which is building up in that space, and there are a huge number of those, the competition is from the, like it is not a listed space, they are startups. So the issue is with margins, same store sales growth is hardly there. And they need to spend huge amount on capex as far as the stores, the number of stores expansion is concerned. So I think overall, the sort of like valuation which they got in the past, I don't think that will be there in the future. So I would in fact be a seller in Jubilant on any sort of a rise along with the markets, because I really don't see any expansion out there.
Okay, got that. Thanks very much for the updates. Just stay on, Amrish. We'll come back. Right now, we have to take a quick break. The market's absolutely flattening out. This could look like a negative close for all you know. Quite a disappointment, actually, from the way we started. Take a break and come back with the closing.
Suresh.
Yes, brother?
Please take care of it, huh?
Sure, I'll do it.
Really? You're concerned for it even if you're going to the village for just 2 days. But you never think about us this way.
Everything will be fine. My Rickshaw Union Group has taken LIC's Group Micro-Term Assurance Plan. Papa! Wow! Now, no matter what, my family will keep moving forward.
Get LIC's Group Micro-Term Assurance Plan. Keep your family secure.
टेंशन किस बात की? सेंचुरी MDF का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ।
लो एमिशन प्रीमियम प्लस बाय सेंचुरी प्रोवुड।
स्मिता, आओ, बेसो बेसो।
स्कार्फ में भी पहचान लिया?
हाँ, बोलो। आज बैंक कैसे? मनी ट्रांसफर?
कर दी, ऐप से।
तो FD?
ऐप से।
चेक बुक चाहिए होगी नहीं, है ना?
मेरी शादी है। ऐप में आप नहीं हो ना, इसीलिए खुद कार्ड देने चली आई।
बहुत सरस है।
रिश्ता आपसे है, सिर्फ ऐप से नहीं। फेडरल बैंक, योर परफेक्ट बैंकिंग पार्टनर।
Indo Wind Energy Limited. Rights issue open. Closes on 24th February 2023.
When it comes to making your drive electric, never settle for the ordinary. Go EV with India's #1 EV, Nexon EV. Proven and trusted by over 40,000 customers. Feature loaded and safe, offering a premium driving experience. Now with enhanced range and an exciting new price. Nexon EV. Drive what drove India electric.
Come what may, with Apollo Tires, have a wonderful day.
टेंशन किस बात की? सेंचुरी MDF का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ।
Low Emission Premium Plus by Century ProWood.
Invest once and enjoy guaranteed maturity with life cover with LIC's Dhan Varsha, a single premium plan for your family's security and prosperity.
Welcome Welcome back. FTSE's semi-annual review will see adjustments today, and to understand what can be expected and which counters will see inflows or outflows, Vivek is joining in. Vivek.
Well, the FTSE semi-annual index review announcements will come, tomorrow prior to market opening. And there are a couple of stocks to keep on the radar, given the fact that, quite a lot of potential inclusions are there in this particular semi-annual index review. First on our list is Kotak Mahindra Bank. Now, remember, Kotak Mahindra Bank is likely to be added to the FTSE indices. More importantly, what, analysts would be waiting for is, how is it going to be included, whether it's going to be included over one particular direct one-time inclusion or whether this particular inclusion is staggered over multiple quarters. Now, Nuvama Alternative Research says that, the Kotak Mahindra inclusion is likely to be staggered over multiple quarters, and in this particular, quarter, there could be an estimated inflow of a little over $80 million in this particular quarter itself. Some of the other potential candidates, there are quite a few. We filter out the ones that are likely to have a higher impact. Patanjali Foods, Supreme Industries, APL Apollo Tubes, Phoenix Mills Solar Industries, M&M Financials, ABFRL, as well as FACT, that is fertilizer at the top, the fertilizer company. These are the names that are likely to make the list come tomorrow. Another important development that analysts would keep an eye out for is the treatment of Adani Group stocks within the FTSE index. Remember, on Jan 31st, they had given out a notification saying that they are reviewing the situation, and as of now, they continue to remain within the FTSE indices.
Okay, thank you very much for that. Ambrish is still with us. Ambrish, do you track Tanla Platforms? They're planning to launch an anti-phishing technology platform. The stock has been struggling off late. It's down 60% in the last 1 year. The earnings picture has not been good. They're facing competition from a lot of banks, and that's hurting the company's revenue growth rates and margins. But this anti-phishing technology platforms, what do you think would be the prospects of this?
Sentimentally positive, basically because the stock has corrected majorly from those higher levels. But first of all, we need to find out whether those higher levels were justifiable at all or not. And I think it was just a bit too expensive. And the feel which I have is it was more rigged than the fundamentals that the stock had moved up. So, in case it moves up because of this news, I think it's a good time for people, those who are stuck, to possibly book out.
Okay, all right. Amrish, we'll leave it there. It's a pleasure. Thank you very much for joining us with those thoughts, and it's always good to have you with us here. It's going to be almost unchanged day on day from yesterday's close. Look at that. Tells you the story. Started basically at the high point, and then it was a slow, gradual drift. The final push lower came, right before we started on this edition of Closing Bell at about 218, 219 or so, when we started the final slip, which gets us into absolutely flat zone in trade. Let's just look at the Bank Nifty as well and look at what's happening there. That's had it worse actually, 0.5% lower on the Nifty Bank, and there also the slip was continuous, although it did pick up post 250 or so on the Nifty Bank. Sharp slide actually after that on the Nifty Bank. I think broader markets a little better. Mid-cap index and small-cap indices. Mid-cap index is up about 0.6, and I think we've got the small-cap index, which ends up almost 1% higher. Consequently, the market breadth was in favor of advances. 1250 stocks are higher, and you've got about 1,000 stocks lower. Of course, the gap was much wider earlier on with the market doing well. Rima.
Well, Nifty IT led the way. In fact, Tech Mahindra was amongst the big movers, 5.5% gain today, including yesterday's rally. The stock is up 11%. TCS contributed on the way up, and Wipro was higher in trade. ONGC sees buying after the cut on the windfall tax gains. So that was the top Nifty gainer, up 5.5%. Strength seen in Nestle after the margin beat. The stock up 1.5%. Apollo Hospitals sees buying for the second consecutive day, and Divi's Laboratory ends up higher. Many of the Adani Group stocks also end up with some green. So Adani Ports up nearly 1.5%. On the losing side, HDFC Life Insurance a bit subdued, BPCL, Bajaj Finance, and then you've got weakness coming through in HUL. In the banking pack, ICICI, Axis Bank, State Bank of India all end in the red.
Well, that's right, Rima. Well, from the broader markets as well, quite a few stocks were calling for attention. Interglobe Aviation post that large deal, well, that stock was down close to around 4.5%. Vodafone Idea, the woes continue, so that stock was down close to around 3%. ICICI Prudential, that was down close to around 2.5%. And Ramco Cements, it had a good run, posted its numbers, but that one as well came in for some profit taking. On the flip side, Piramal Pharma, after a while, you saw a bit of a spurt out there. One of the facilities got an all clear, so I think that was the reason why that stock was up close to around 5.5% in trade. ONGC was higher. From the broader markets, Oil India was higher. Remember, valuation-wise, there is some comfort out there. The numbers look quite good, and that stock is up close to around 10% post its numbers. Emphasis as well did pretty well. SRF was a stock that was up close to around 3% odd. So though the headline Nifty did end, more or less flattish, there were plenty of stocks that were up by close to around 4 to around 7% odd. MCX as well did bounce back. There was fear, additional competition coming in because NSE was creeping into their turf. But it seems for the time being, at least, the street believed that, in the past that's happened, but MCX has been a dominant player. So that as well did bounce up and trade. Imagine we trade the full session and we're going to end.
Absolutely flat,
Just
right?
take a look, pull up the Nifty. It's
we could just end up in the red as well, right? And this is after starting off with considerable gain. From the highs, we're down more than 100 points.
No, we'll actually end in the green because of averaging.
It's 0.4 now. The last tick is 0.4.
No, because of averaging, we'll end up 15 to 20 points, I think so. But the final tick is, you back the full day, morning to evening, and at stumps, you haven't scored anything.
0.00 would have looked nice, but it's not going to be. It's going to be a little different. But anyway, it's a flat close after what was looking very, very good early on. Well, that's markets for you. We'll wrap up on this edition of Closing Bell from all of us here. Thank you very much for staying with us. But don't go anywhere. Our Thursday special big deal comes up next. Stay tuned for that.
Powered by LIC, हर पल आपके